Welcome to this lesson on order books, bids, and asks. In this video, you'll learn how order books display supply and demand in the trading markets. Understanding this concept is essential for any trader who wants to make informed decisions. An order book is a real-time electronic list of all buy and sell orders for a specific asset. These orders are organized by price level, showing you exactly what traders are willing to pay or accept at any given moment. Think of it as a live scoreboard that displays all the active trading interest. Every order book has two sides. On one side, we have the bid, which represents buy orders from traders who want to purchase the asset. On the other side, we have the ask, which represents sell orders from traders who want to sell the asset. These two sides work together to create a market. Let's focus on the bid side first. The bid is the highest price that a buyer is currently willing to pay for an asset. This side of the order book represents demand in the market. The more buy orders you see, the stronger the demand for that particular asset. Now let's look at the ask side. The ask is the lowest price that a seller is willing to accept for their asset. This side represents supply in the market. When you see many sell orders, it indicates that there's significant supply available for traders to purchase. Here's a practical example of how an order book looks. At the top, you see ask orders or sell orders. For instance, someone is willing to sell 100 shares at $50.30, and another seller offers 250 shares at $50.25. Below that, you see bid orders or buy orders. A buyer wants 150 shares at $50.20, while another buyer wants 300 shares at $50.15. The bid-ask spread is a crucial concept in trading. It's simply the difference between the highest bid price and the lowest ask price. You calculate it by subtracting the bid price from the ask price. This spread tells you how liquid the market is. A smaller spread usually means a more active and liquid market. Order books are powerful tools because they visually show supply and demand. Demand is shown through bid orders, telling you how much buyers want the asset. Supply is shown through ask orders, indicating how much sellers are willing to offer. By reading the order book, you can gauge market sentiment and make better trading decisions. Let's recap the key points. Order books list all buy and sell orders for an asset. Bids are buy orders and represent demand in the market. Asks are sell orders and represent supply. The spread is the gap between the highest bid and lowest ask. By understanding these elements, you'll be better equipped to analyze market conditions and execute trades with confidence.
If you like this video, hit that like button and don't forget to subscribe. Visit codelucky.com for more such useful content.